The rupee swings but stays strong. The rupee swung like the Sensex in a manner of speaking before ending lower on Tuesday, and it pushed the currency's near-dated implied volatility to an over 2-year high, according to Reuters. The rupee jumped out of the blocks to touch its year-to-date or calendar high of 84 rupees 95 paise before going down to its day low of 85 rupees 38 paise. And it finally ended at 85 rupees 26 paise. The jitters have also pushed the rupee's 1-month implied volatility to 5.5%, which Reuters says is the highest since March 23rd. Meanwhile, the dollar index was up about 0.2% at 99.2. So how is the rupee stacking up right now in contrast to previous month, and where could it be headed, and what could be the driving factors? There are also some interesting insights on India's Forex reserves and how they've jumped in value because of the dollar index and the gold price appreciation. I reached out to Anindya Banerjee, head of research for Forex and interest rates at Quotex Securities, and I began by asking him how he would describe the movements of the rupee in recent days.
See, Indian rupee, in fact, if you look at the entire performance of the US dollar against all currencies, so basically it has retraced the entire Trump pump and dump. So it is back to where the dollar index is back to where it was in September of last year. The USD INR has not done the complete retracement because it started from 84 levels. It had gone to 84.90-ish. I think because RBI is there in the market. They don't like an upside volatility and they also don't like too much of downside volatility. So it is basically a kind of a small overall, I would say the area of movement of the Indian rupee has been much smaller compared to other currencies, but trend has been same. It is up and down.
How is the rupee behaving specifically versus other regional currencies at this point?
So last 1 month or so, Indian rupee has been one of the strongest currencies. It has appreciated a lot. But if you look at how much the dollar index has done, so it has come down from levels of 110, 111 all the way to almost 97.
99.
Since then, it has bounced a bit. So it has done much more. So Indian rupee has done well against the other Asian currencies, but compared to the European currencies, it has been an underperformer.
And what are the kind of signals that you're getting at this point, either on both the dollar as well as the rupee, if you were to look a little ahead?
Sure. The last time when we spoke, I said that I expect the trade war to intensify, and I stick to that stance. And I expect the economic decoupling between China and America to intensify. And it could actually spread towards capital flows, because I think a few weeks back, there was a comment from the Treasury Secretary that they are considering delisting of the Chinese companies in the US stock exchanges. But after that, the market turmoil, that thing kind of faded away. But I think that kind of actions may happen in the coming times. Because see, the Trump administration's America First policy is basically cannot happen without America sort of a hard decoupling with China. It has to do a hard decoupling because currently America is the consumer, China is the producer. So if America has to create the ecosystem for the manufacturing to come in and happen, it needs to have much more intensified trade war with China. And that's what I am expecting in the coming quarters. And that can be negative for the emerging market currencies initially, because it will be negative for growth, both for America as well as for China. And during that time, we could see the Indian rupee depreciate a bit. So towards 86, half 87 odd levels.
Right. And we are seeing very high volatility in recent days, including on Tuesday. So what does that represent? I mean, is it because traders are uncertain, or are they being driven by factors like the tension on the India-Pakistan border, or is it trade wars? Is it a combination of everything?
It's actually, yes, it's a very emotional time, because if you look at the global factors, the whole market is changing its trend every day on a tweet. So when the market is flipping on a tweet from the Trump administration or from China, the volatility is going to be high. And as I said, the overarching theme is of decoupling or intensification of the trade war, which feeds onto the volatility. So volatility is going to be structurally higher going forward, but that doesn't mean every week we will have higher volatility. We'll get these calm before the storm kind of moments. And we are sort of in that phase, a lull phase. It may continue for a couple of more months till the supply shock hits America, because the kind of tariff-led dislocation that has happened between the China and the US trade of goods, it is quite possible that in the coming months we could see actually a shortage. And that is the time when the markets could see a higher volatility.
If you were to look ahead, would you say that the rupee is going to be consistent and steady like it was last year? Or do you see it, unpredictable?
See, last year, in fact, 2023, 2024 was unprecedented low volatility. It's like you have to go all the way back to early 2000 to get that kind of a low volatile phase. So I don't think we are getting that back because the world has changed. The RBI is going to be extremely active in the market. That's not changing. And RBI has got all the tools in place. They have got large reserves. They intervene in the offshore market. They intervene in onshore. So RBI is going to be extremely vigilant. But if the overall volatility rises, which I'm expecting, let's say across the board in the dollar against all currency pairs, then Indian rupee will also see an increase in volatility. But it will be lesser than other currencies.
We've also seen a rise in Forex reserves, and we're just $19 billion or $20 billion short of the all-time high hit in September last year. Does that say anything?
It just means that when this decline happened in the dollar internationally, the RBI was there recouping its lost reserves. But also we have to understand a lot of this fluctuation in the reserves over the past 6 months has been due to the valuation gain and loss, right? Because dollar index rose 8-9%, it fell 10%. So you get a huge impact on the FX reserves. So on the FX assets. And plus, there is a valuation impact of gold because gold prices have jumped by almost 28%, right? So in a span of 4 months. So when we strip out the valuation impact, I don't think the RBI has been so active in the market as far as to make the FX reserves swing in such large quantity. It's primarily on account of valuation.
Right, that's good to know. Anindya, thank you so much for your time.
Thank you for having me.